Two of Australia's largest banks have warned the overheated property market will create future problems for aspiring homeowners. For more on this is the Executive Chairman of Yellow Brick Road Home Loans, Mark Bouris, joining us as he often does on a Friday. Mark, good to see you. Thanks for your time as well. Now, those concerns have come from the CBA and the ANZ this morning. Do you share those concerns?
They're not saying they're concerned. They're actually saying what they want to do is act now to make sure we don't have a problem in the future. And Matt Common, who's the boss of the CBA, made it pretty clear that and the ANZ did too, as far as they're concerned, they are not concerned about what is going on right now. They're concerned about the future. In other words, if we keep galloping at 20% increases per annum, that's unsustainable, which makes sense. So, I think also it's quite smart from these two guys, particularly Common, because if the banks don't get up and do something about it themselves now, the government will get in and make them do something. So I think what they're trying to do is self-regulate and sort of signal to the market, just be careful. We're now going to be a bit more careful in terms of how we assess you when we lend our money to you.
Yeah, right. So it's going to be tougher for people to get a home loan.
Yeah, so the way they've done it and what CBA has done now, and this is, by the way, and I'll drop it just a tip into you now, tip into all your listeners. If you're going to try and borrow money in the future, make sure you go to someone who, don't go straight to your bank and ask for it, because the banks are now going to assess you on a much higher threshold. So let's say you're paying 2.5% on your interest rate, that's the current rate that you're going to get. The banks are going to assess you on an interest rate like CBA, or they assess you on an interest rate of around 5%, so 5.25%. They're going to assume that interest rates are much higher, which builds a much higher threshold in terms of qualification. The tip I'm going to leave with listeners is this. If you go along to your bank and they're assessing you on a much higher rate today than they have done in the past, and if you fail that assessment, then that's going to be a red flag for future. So make sure you go and talk to a broker, because if a broker does it, it doesn't appear on your file. It does not appear on your file. It's the broker's inquiry.
Right.
That's really important.
If we're looking
not all banks are doing this.
Right. So if we're looking at those price rises to continue, another 20%, and we're talking metro here, not everywhere, and in particular Sydney leading the way, really. But do you think it's overpriced? Has it gone too far? And where's the correction?
Well, the correction, this is the whole point of the commentary that the bank's been making. There was a Senate committee this week. Yeah. These comments were made before the Economic Senate committee this week. And the correction will be, we hope, will not be the prices falling, but the correction will be the amount of money that gets lent by the banks for the future rises. So it's about correcting future rises. So what they're not saying, we want to take prices if they're at, average price $1 million, for Metro Melbourne for a house. They're not saying that we're going to take that back from $1 million to 900,000. They're saying we don't want that to go from 1 million to 1.2 million over the next 12 months. So the correction will be in the price rise. They want to have a sustainable price rise. So maybe the question is, Peter, what do we expect price rises to look like in the next 12 months, given the bank's early intervention right now? And somewhere what would be comfortable would be somewhere, I would say, what the banks should be looking at is somewhere between 5 and 10% per annum is a much more sustainable price raise regime.
But I guess that potential first home loan or first home buyers can still fall into a trap, though, of taking on too much debt, and then that causes problems later on down the track. That's a real live issue, in your opinion? Yeah.
Well, that's a live issue, particularly first home buyers, because first home buyers are being encouraged with stamp duty concessions and all sorts of things, grants, etc., to go out and buy these properties. And let's assume that you've got to make a couple of assumptions here to cover off that particular question. The assumption would be if there is a drop in their income or if there's an interest rate increase. So those individuals were assessed not on the 5.25 threshold that Matt Common's talking about for future lending, but they were assessed on a much lower threshold. So the sensitivity of those particular individuals is to a slight increase in interest rates, or alternatively, a change in their wages. Or there has always been an assumption that their wages will increase. And if their wages, as we know, wages haven't increased in Australia for a long, long, long time. So if their wages don't increase, yet cost of living creeps. And one thing is happening, I've been saying this for a long time now, cost of living in this country, whilst the CPI index says there's no inflation, but there is an increase in cost of living because we take on more expenses, as opposed to expenses going up. You know, on a yearly basis, we are taking on more expenses, which may not be going up, but we just take on more expenses. You know, we spend more time on Netflix. We spend more time on, using Uber Eats because of the lockdown. We're buying in more often. We're changing our behaviours, and if those behaviours continue to change and become sustained within a household for a first home buyer, then they might have a bit of stress coming into the 2022 year. And the banks are really conscious of this sort of stuff. And there's a lot of people on hold at the moment. There's still a couple of thousand people on hold, as a result of not being able to pay their mortgage because they might have lost their job. So we're going to have a good hard look at that. Banks are going to have a good hard look at that in March next year.
Okay, Mark, good to see you. Thanks for your time. Talk to you soon.
Good on you, Pete.